If you are over the age of 65, a major shift in the 2026 tax laws could legally freeze your property taxes, save you thousands on medical costs, and exempt your Social Security from state taxes entirely. Yet, the county tax office will never call to tell you this. Millions of seniors are overpaying their hard-earned money simply because the system remains completely silent. I am Dr. Collins, your retired U.S. benefits advisor, and today I am giving you the exact blueprint to stop paying unnecessary taxes and claim the financial freedom you have rightfully earned. Consider the reality facing Sarah Remington, a dedicated former educator living in the home she built decades ago. At 67, she is drowning in rising tax notices, watching her fixed income evaporate. She believes these mounting dues are an unavoidable reality of aging, yet she is merely a victim of an opaque administrative maze. Local authorities rarely automate these critical exemptions, leaving seniors to navigate labyrinthine application processes alone. It is a silent trap designed to favor the institution, not the individual. When I stepped in to review Sarah's file, it became clear that her county had been sitting on a potential tax freeze provision for years. She had simply never been told that her age entitled her to this protection. We are talking about thousands of dollars annually, yet the instructions remain buried in dense, unreadable legislative code. But here is the critical part. Sarah just discovered a hidden clause in her county's newest guidelines that could wipe out her entire property tax bill, provided she meets the strict filing deadline looming in just 48 hours. Everything rests on these next 2 days. Robert Nelson sits at his cluttered kitchen table, the glow of his laptop casting deep shadows across his weathered face. For years, this retired machinist has faithfully filed his taxes, believing he owed every cent demanded by the authorities. But tonight, a breakthrough. H changes everything. While navigating the dense, bureaucratic jargon I often highlight here on the Dr. Collins channel, Robert discovers a staggering realization. He has been paying taxes on his Social Security benefits unnecessarily. He stares at the screen, bewildered. He isn't alone in this oversight. I've often explained that the federal standard deduction increases quite significantly once you turn 65, providing a buffer many seniors never claim. Even more critical is the reality that 38 states do not tax Social Security at all. Yet millions of Americans, like Robert, continue to leave their hard-earned money on the table simply because the tax code is designed to be intentionally opaque. Robert begins digging through his records, his fingers trembling slightly as he pulls out his returns from the last 3 years. He starts calculating, subtracting the figures he now realizes were exempt from his taxable income. As the total grows, the reality hits him with the weight of a physical blow. The government owes him thousands of dollars in overpayments. This isn't just a minor bookkeeping error. It is a significant portion of his retirement savings that he effectively surrendered by mistake. If you think this happens only to the uninformed, you are deeply mistaken. He checks the calendar. The tax season is closing rapidly, and he realizes he must file an amended return immediately to claw back what is rightfully his. Will he finish in time to secure his funds? Sarah stares at the dust motes dancing in the sunlight of her hallway, clutching a stack of property tax notices like a death warrant. The house is far too large for her now, but the fear of capital gains tax has kept her paralyzed, trapped in a structure she can no longer afford to maintain. She feels the walls closing in, burdened by the heavy weight of a lifetime spent in these rooms. He checks the calendar. The tax season is closing rapidly, and he realizes he must file an amended return immediately to claw back what is rightfully his. Will he finish in time to secure his funds? Sarah stares at the dust motes dancing in the sunlight of her hallway, clutching a stack of property tax notices like a death warrant. The house is far too large for her now, but the fear of capital gains tax has kept her paralyzed, trapped in a structure she can no longer afford to maintain. She feels the walls closing in, burdened by the heavy weight of a lifetime spent in these rooms. But if you think this knowledge is the final piece of the puzzle, you are mistaken, because technicalities are where the system turns sharp. Just as she contemplates listing the property, a local developer makes an aggressive, immediate offer. The price is generous, yet her heart stops. She spent several months in a nursing home last year following her surgery. Does that brief absence jeopardize her status as a primary resident? She must verify the timeline before she signs a single document. But if you think this knowledge is the final piece of the puzzle, you are mistaken, because technicalities are where the system turns sharp. Just as she contemplates listing the property, a local developer makes an aggressive, immediate offer. The price is generous, yet her heart stops. She spent several months in a nursing home last year following her surgery. Does that brief absence jeopardize her status as a primary resident? She must verify the timeline before she signs a single document. Robert arrives at the local DMV office, clutching his paperwork, determined to claim the exemption Dr. Collins described. He reaches the counter, explains his situation clearly, and requests the senior discount. The clerk barely glances at him, tapping rhythmically on her keyboard before pausing with a sigh. She slides his forms back across the counter, stating coldly that the request is denied because his document lacks a mandatory state-level age verification seal. Frustration is a heavy burden, but let's pivot to where you can actually claw back control. Sarah, listen closely. Your mounting out-of-pocket medical expenses aren't just a crushing weight, they are a legitimate shield if you know how to wield them. Most retirees settle for the standard deduction, unaware that they are essentially leaving money on the table when their health costs spiral. Here is the strategy. If your total unreimbursed medical expenses exceeds 7.5% of your adjusted gross income, you hit the threshold for an itemized deduction. By shifting away from the standard route, you can deduct these costs entirely, effectively lowering your taxable income and putting a significant dent in your overall tax liability. It is not a loophole, but a fundamental provision designed to protect those facing chronic health battles. Think of it as reclaiming the capital that your treatments have already stripped away. This is exactly the kind of fiscal navigation I specialize in here at Dr. Collins, retired U.S. benefits advisor. But if you think these tax codes are straightforward, you are sadly mistaken. The system relies on your silence and your inability to organize the mountain of paperwork that proves your eligibility. I've seen countless seniors miss out on thousands simply because they couldn't produce the right trail of evidence when it mattered most. Sarah stands in her dimly lit study, frantically rummaging through dusty shoeboxes and weathered folders. Her heart hammers against her ribs as she searches for every misplaced pharmacy printout and elusive medical insurance receipt. She realizes with a cold, sinking dread that a single missing document in this chaotic stack could trigger a relentless IRS audit, turning her bid for relief into a full-blown nightmare. Robert, listen closely. Transferring your deed now to dodge probate sounds simple, but you're walking straight into a tax disaster. If you gift that property, you're potentially triggering the gift tax, though your lifetime exemption covers most of it. However, the real danger is losing the stepped-up basis. If you give your daughter the home now, she inherits your original purchase price. When she sells, she'll face massive capital gains taxes on the appreciation. By keeping the title until you pass, the property receives a step up to its current market value, effectively wiping out those gains for her. It's a classic trap, yet easily avoidable with the right strategy. I've spent years at Dr. Collins, retired U.S. benefits advisor, helping folks like you navigate these legal minefields, and the math always favors patience over impulse. Keep the asset, clarify your estate planning, and ensure your legacy remains a blessing, not a burden. It's about protecting your hard-earned equity from unnecessary erosion. But this is where the calm waters turn turbulent, as the sharks are already circling your doorstep. While you are here, weighing these legal realities, your daughter is being cornered. A predatory local realtor, sensing an easy commission, has cornered her with a stack of documents. They are pressuring her to sign an immediate transfer deed, masquerading it as a convenient shortcut to settle your estate. They aren't telling her that this signature will bypass the step-up in basis, leaving her with a staggering tax bill the moment you're gone. She feels the heat, pen trembling above the line, ready to sacrifice your family's future for a false sense of security. If you don't reach her in time, the legacy you built will vanish into the government's coffers. The pen is still hovering, but Robert pulls his daughter back just as the ink threatens to touch the paper. That moment of hesitation saved everything. With the systematic roadmap we laid out, Sarah and Robert stopped reacting to predatory panic and started executing a strategy. They utilized the comprehensive checklist, cross-referenced every legal statute, and submitted their exemption filings with the county auditor. The result? Thousands of dollars in property taxes stripped away legally and permanently. Sarah's home, the very foundation of her memories, is finally secure. The pen is still hovering, but Robert pulls his daughter back just as the ink threatens to touch the paper. That moment of hesitation saved everything. With the systematic roadmap we laid out, Sarah and Robert stopped reacting to predatory panic and started executing a strategy. They utilized the comprehensive checklist, cross-referenced every legal statute, and submitted their exemption filings with the county auditor. The result? Thousands of dollars in property taxes stripped away, legally and permanently. Sarah's home, the very foundation of her memories, is finally secure. The burden of uncertainty has vanished, replaced by the quiet confidence of those who know how to protect their own. But realize this: administrative silence is a deliberate tactic. When you don't ask, they don't tell. Knowledge isn't just power, it is the ultimate shield against the erosion of your savings by inflation and bureaucratic opacity. You are not a victim of the system. You are a participant who finally knows the rules of the game. If you think the journey ends with securing your home, you have only just begun to see the landscape clearly. The true battle is staying ahead of the shifting deadlines that threaten to close your window of opportunity. I have prepared the exact 2026 exemption forms for our community to ensure your filing is airtight before the local offices shut their doors. You cannot afford to be late. Join our community now to download these documents and claim the protection you have earned. We are building a fortress of financial independence, one senior at a time. What legacy will you be fighting to protect when the next cycle of tax assessments begins?